Ever found yourself in that tight spot where payday feels like a distant dream, but bills are knocking at your door right now? You're not alone. Millions of Americans face this very predicament every single month. It's a situation that's fueled the rise of financial apps offering paycheck advances, promising quick access to cash before your actual paycheck arrives. One such app that's been making waves is B9. But a crucial question lingers: does B9 charge interest for these paycheck advances? That's what we're diving into today. Before we get into the specifics of B9, let's understand the landscape of paycheck advances. Traditionally, if you needed money before payday, you'd probably think of payday loans. These are notorious for their incredibly high interest rates, often trapping borrowers in a cycle of debt. They work by offering small, short-term loans, but the fees and interest can be astronomical, sometimes reaching an APR of over 400%. This makes them a very expensive option and something you generally want to avoid. Then came the rise of apps offering alternatives, often marketed as paycheck advances, cash advances, or early wage access. These apps aim to provide a more affordable solution to short-term cash flow problems. They generally work by connecting to your bank account and verifying your income and pay schedule. Based on this information, they allow you to access a portion of your earned wages before your official payday. Now, the crucial difference between these apps and traditional payday loans often lies in how they charge for their services. Many of these apps avoid charging traditional interest rates. Instead, they often use other methods to generate revenue, such as tips or voluntary fees. Some apps rely on users voluntarily tipping for the service. This means you can choose to pay a small amount as a thank you, but it's not mandatory. Subscription fees. Some apps operate on a subscription model, charging a recurring monthly or annual fee for access to their services, including paycheck advances. Expedited transfer fees. While the standard transfer of funds might be free or low cost, some apps charge a fee for instant or expedited transfers. So, where does B9 fit into all of this? Does B9 charge interest on its paycheck advances? The short answer is no. B9 doesn't charge traditional interest rates on its paycheck advances. They don't operate like a payday loan lender. Instead, they primarily utilize a subscription-based model. This means you pay a recurring fee to access their suite of financial services, which includes early access to your paycheck. Let's break down how B9 works in a little more detail. B9 offers different membership tiers, each with varying features and benefits. The key thing to understand is that the ability to access paycheck advances is typically tied to a paid membership. By paying a monthly or annual fee, you gain access to features such as early paycheck access. This allows you to receive a portion of your paycheck up to a few days early. Budgeting tools. B9 often provides tools to help you manage your finances, track spending, and create budgets. Credit building services. Some tiers may include features designed to help you improve your credit score. Therefore, the cost associated with accessing your paycheck early through B9 isn't an interest rate applied to the advance itself. It's the cost of the subscription that grants you access to that feature. Now, it's crucial to understand a few important points about B9 and similar apps. Eligibility. You need to meet certain requirements to be eligible for paycheck advances. These requirements often include having a consistent income, a regular pay schedule, and a linked bank account in good standing. Advance limits. There are limits on how much you can advance from your paycheck. These limits are typically based on your income and pay frequency. Repayment. Repayment is usually automatic. On your next payday, the advanced amount is automatically deducted from your account. It's also important to consider the overall cost. While B9 doesn't charge interest, the subscription fee is still a cost. You need to evaluate whether the value you receive from the other features and the convenience of early paycheck access justifies the subscription price. If you only occasionally need access to funds before payday, the subscription might not be the most cost-effective solution. Consider this scenario. If you only need $50 a couple of times a year before payday, paying a monthly subscription might be more expensive than simply waiting for your next paycheck or considering other low-cost options. However, if you regularly utilize the early paycheck feature and other tools offered by B9, the subscription could provide good value. It's also essential to be mindful of relying too heavily on paycheck advances. While they can be helpful in a pinch, consistently needing to access your paycheck early could be a sign of underlying financial issues. It's important to use these services responsibly and focus on creating a sustainable budget and financial plan. In summary, B9 doesn't charge interest in the traditional sense on its paycheck advances. They use a subscription model where you pay a fee for access to a range of financial services, including early paycheck access. The key takeaway is to carefully evaluate the cost of the subscription and determine if it makes sense for your individual financial situation. Compare this cost to other options available to you and assess whether the features and convenience offered by B9 justify the expense. Remember to use these services responsibly and prioritize building a strong financial foundation. With that said, thanks for watching, and until next time.